What is up, TCT community? Hope all of you guys are doing good and are having an amazing weekend. I am fully back behind the computer, and I thought let me just make a video talking about Doge because we got exactly what we wanted yesterday during the day. Now, I was out of the house after around 3 p.m., was visiting the city because my friend opened a new restaurant and it was the opening. It's actually a franchise, so gotta support the boys doing entrepreneurial activities. Absolutely love to see my boys doing entrepreneurial stuff as well. But I want to talk about why the 5 minute breaker structure on that initial third tab was not good enough to enter. And then talk about the entry process right here. Because, before I left the house, I talked to you guys about a potential TCT and TCT entry, which is like exactly what we got. So I just want to clear everything up in here, talking about the Doge trade. Because, in my opinion, like the Doge setup itself, if we have to get rid of any external context situations regarding like Bitcoin or whatsoever, just purely chart focused on Doge, this is like a 10 out of 10 setup. Like it's generally an A triple plus setup. Okay, so I just want to talk about the entry process right here and how you could have managed it in the best way possible. So right here, it would just look at Doge from a context perspective, right? Oh, it would look at Doge from a context perspective. We kind of had that range here. This was technically speaking never a valid accumulation model because we didn't come for the extreme demand, but we did sweep that low, sweeping that sell side liquidity, reversed back up and broke structure. Reacted off the supply here, which was backed by the POC of the previous range, and then we saw a pullback. And I always tell you guys, for the people that remember, I have been stating it a bit less in the past weeks, but I used to always tell you guys the way that you pull back, and it still applies, the way that you pull back will tell you a lot about the expansion in the future. Whereas, like, if you have a breakup structure and you come into supply and the next two candles are heavy rejection candles, there's a high chance that you just had a fake out to sweep liquidity to then reverse back down. Whereas if price spends time up here and you slowly go lower, leaving all the highs intact, that will give you great confidence in calling for a potential higher low, just as an expectation. So when we break structure here pretty significantly on like a 3 day time frame, and we reject from the supply, which is completely normal, and we pull back in the way that we are pulling back, where we are having a single high, single low, and then a lower high, lower low, lower low, lower high, lower low. Like you can just see that we are taking the low, leaving the highs intact, which is an amazing way of retracing because it showcases that the purpose of the retracement is accumulative and not distributive. If you have a distribution at the highs, you can still get a higher low for the higher high, but you have more selling pressure than if the pullback from literally the start of the pullback was already accumulative focused. So I told you guys I really like the way that we're pulling back. That is absolutely amazing. And then from a POI standpoint, to get a potential higher low for the higher high, I always talk about how nice it is to have your low time frame structure demand overlapping with your high time frame structure demand. We're on a 3 day time frame right here. This is your structure demand right here, which is massive structure demand. And then at the high where that breaker structure took place, you can see that extra little structure pool right here making a higher low for the higher high, right? Higher low for the higher high. So that overlapping effect is something I always highlight. I really like that as a potential higher low POI, and that is exactly what price tapped into. Now, then there was some confusion of people asking me, hey Lars, why is this first lower high for the lower low not your range starting point right here? And then I want you guys to simply look and tell me what looks more as a range starting point. The price action in here between tab 1 and at that point tab 2, if you were to pull this as your range starting point right here, or from here. I'm going to make these boxes like ranges. What looks more like a range starting point? The price action in between this low and that low, or that low and then that low? Like you can clearly see here that this is way more, even if you just compare the width between these tabs, right? This took longer to reach that low again while leaving therefore also a better return to zone above, whereas this was just literally one move down. So when you combine that rationality with the fact that usually speaking, the first lower high for the lower low on a lower time frame, like the 1 hour, is typically not your range starting point after a super aggressive expansion. Because we're talking about a super aggressive expansion, you know? It's like this is one massive squeeze up, and then usually you have somewhat of a retracement, then the range, then the continuation back up. So we were watching this, everybody was watching this, and then we got our initial range low, initial range high, and then at that time tab 1 and at that time tab 2. Now there was also some confusion regarding like, hey, I was already long from this. Is that technically correct? Because I ended up not taking it. And yes, technically speaking, this is a correct Model 1 accumulation. I just simply wanted to see a bit more, because if I was expecting price to potentially, truly put in a reversal from here for a macro higher low for a higher high, and because these tabs could be combined into one tab on the higher time frame, because the range is valid on the higher time frame. So on the 3 hour, these tabs disappear and they merge into one tab. I just wanted to see my refined entry. I wanted to see a range that was, or an accumulation that was longer in duration. But technically speaking, yes, this is already a valid Model 1 that then had that break of structure right here. Okay. Now, I wanted to see more. And what we saw was that after that, we got the higher low for the higher high, but you kind of had some distributed behavior locally here, right? That was locally, but that ended up going over into like higher time frame distributed behavior. And that caused that move back down. And this is where it's crucial to pay close attention to what I'm about to say, because we were initially looking at this 15-minute block getting respected right there, okay, for a potential extended accumulation model. But as you can see, if you go on a lower time frame, there was no break of structure here. Okay, there was simply literally it just was one straight shot down. Where initially this was, a bit of a slower price behavior, slower lower highs and lower lows. And then after this point, it really started to move down fast. Okay. So you were building up highs here, which was nice. So I was like, hey, if we can get something like this and bounce, that would be nice for a potential reversal. But then literally after this point, you can see that we moved down very fast right here. Now, we totally disrespected that 15-minute demand zone and we went straight for another low. And I told you guys, this can go over in a higher time frame Model 1 as well. So we can extend this low to right here. And then you can see that this could be a potential Model 1 accumulation. Now, usually when that's the case, I always check, is there something in here that price could come back for as well? Like, if this already mitigated all demand and you already have a Model 1, why not then just create a higher time frame Model 2? Because there isn't really a reason why price should go lower than that low again. But if there is refined demand in here, then you can say price does actually have a reason to create a higher time frame Model 1 because we have demand remaining. And that demand was there, which was simply your refined structure demand. So if you measure the structure, making a lower high for the lower low, and then boom, that broke back to bullish aggressively right there. So this was your structure demand. And then you can already see that the moment that you take out that low again, there is a reason to go lower than that point, because why only go lower just to take that liquidity when that liquidity shouldn't be liquidity particularly from retail, but already from also market maker involvement, because they were trying to accumulate here in the first place. So from a context perspective, when we take that low again, I preferably want to see the refined demand taken, because that was the reason to go lower in the first place. Otherwise, why not just put in a Model 2? because they are already creating this demand here because they are accumulating. So that's one thing, right? Where I'm like, okay, we're creating a Model 1, but then the reason why it could be a Model 1 is because there's still refined demand lower. So I would preferably want to see that get tapped, especially when the deviation is this tiny. It's a super small deviation, okay? But I always say, and I'll keep on telling you, that market structure is indeed king. So if we do break structure significantly, which is a very important term to use right now, if we break market structure significantly with still front running our demand, I'll still take it. But we didn't break market structure significantly here, and I'm going to tell you why. When price is pulling back here, okay, I already stated a minute earlier, from this point to that point, this was a proper slow pullback, okay? That was a pretty nice slow pullback. And I was hoping for some sort of like a sell to buy to reverse back up. But ever since that point, the move down was super aggressive. Now, on a lower time frame, it might still look like somewhat of a return to zone because you have so many lower highs. But if you zoom out, and reminding you that the model was valid on a super high time frame, you can just see how aggressive this move back down is. It's a pretty fast move down, where here you can at least see a bullish candle in between, but then these last two candles, super aggressive towards the downside. So when you come down this aggressive on a higher time frame model, and with higher time frame, I am referring to range duration and not time frame itself. So when you have a 3-day model, almost 4 days in duration, and you're slowly pulling back here, having that return to zone above, and then you flush back down on a higher time frame model, it is super normal to get then a break of structure back to bullish on a lower time frame that then goes up ever so slightly and continues with like your 10-minute downtrend, which in this case, or 10 to 15 minute, which simply looks something like this, making a lower high for a lower low. Because from this point on, the move down was super aggressive. And you're trading a higher time frame range that's 4 days in duration. So when the duration of the range is this big and that last move down is pretty aggressive, while you are expecting to go over into the weekend where some sort of a ranging environment can be expected, you got to be careful that your lower time frame break doesn't simply continue with the downtrend like this, especially in combination with the fact that, hey, we still have this demand below. Okay, so when you have a range that's multi days in duration, and you are coming down with a return to zone, but then you're coming down faster, and you get that low time frame break, you got to be careful that that low time frame break is not significant enough. And in this case, for me also, this is not significant enough. And then when you pair that in combination with, I'm entering the weekend, so I can expect the range and I can maybe expect something like this while having the demand lower, which is the reason you took that low in the first place, because you can see the moment we tapped that, that's when the true reversal started. That's why that 5-minute break is not significant enough. But if you simply want to follow structure and you wanted to just give it a shot in case of a V-shaped reversal, well, you can, right? Because you got the 5-minute higher low for the higher high. So price pulled back. You literally pulled back to like the extreme demand. I was grabbing the last bearish candle there. You got the 5-minute breaker structure. If you enter here and you put your stop loss there below, and then you get the higher low for the higher high, mitigating extreme demand, you control your stop loss to this low. Now you're only risking like 0.5%. And then the moment you break that structure back to bearish, well, that's the indication that this trend is going to continue itself. So then you can just either move your stop to break even or just exit the position. So with correct trade management, you could have also just avoided a loss here by just following market structure rules, because if you have your 15-minute downtrend looking like this, in order to confirm the lower high for the lower low, you simply watch this trend, which broke bullish, and then it broke back to bearish right here on the 5-minute time frame. It also broke back to bearish on the lower time frame right there already. And then you can apply the domino effect going down. So, understanding that 5-minute break is riskier, you can still take it if you wanted to. In my opinion, when you have that combination of a higher time frame model with the demand below and a lower time frame break, you can expect some sort of, more manipulation and more development before the actual reversal. I'm going to be cautious, but if you decide to take it, then with correct trade management in a riskier environment, you can still end up in a break-even position. Now, talking about the exact entry, in my opinion, this was a very easy entry, because with the thought process that I've just given you, my main purpose was indeed mitigating that refined demand. And we had a very, very, very high probability lower time frame range. That is the third tab of your high time frame range. So you can see right here that we have our lower time frame tab 1, tab 2, and then tab 3. I'm going to represent it in this way. I'm not going to put that range right now, otherwise it just simply gets too messy. I told you guys that what I simply want to see, okay, the only thing I simply want to see is I just want to see buyers step in. Like, price is getting dragged down over and over and over again, creating that beautiful return to zone. So we know once we start to squeeze, the squeeze is going to be pretty easy. It's going to be a pretty aggressive squeeze towards the upside, because there's not that much resistance, because there's only buy side liquidity above, because we've been getting dragged down. The only reason they made price pull back is for a higher time frame Model 1, because we already had a Model 1, must have been to mitigate the most refined demand zone right there, if we are intended to accumulate in general. So then when we create this high probability low time frame range, which could be TCT and TCT, well, when I have the thesis that, okay, they are pulling price back to mitigate this demand, then the only thing I need to see is a low time frame breaker structure following this 1, 2, and 3 to enter the position, preferably in aggressive fashion. So I want to see price tap the demand and then get a strong buyback, immediately breaking structure, and then we have a low time frame Model 1 accumulation right here that could rotate into that higher time frame Model 1 target. So I'm going to delete this. So when we zoom in on the lower time frame right here, you can see that this is exactly what you want to see. I'm trying to get to the 1 minute here. The 1 minute is not cooperating. Okay, then we just keep it on the 2. I don't know why the 1 minute is not loading, but this was a 1 minute breaker structure. But you can see right here, we tap it, we go down, super aggressive bearish candle, boom, buyback. That is exactly what you want to see. These buyers stepping in right here. This volume right there, that manipulative volume, right? I'm not telling you guys to do volume analysis. It's just an extra addition. But I just want to see buyers step in. I want to see manipulation. I want to see something fast, better. I want to see market makers stepping in, bidding price higher, because that is what we're anticipating on. So the moment you get this break right here, well, that confirms the rotation back up to that high based on this Model 1 accumulation. Didn't even have any significant resistance in here. See, no order blocks, no structure supply POIs. No. It's a fairly faster move down, but I'm anticipating on the sell to buy, because in general, I just want to see something aggressive. It's like if price is doing something like this, and this is a general thesis, if price is like doing something like this and we're just curling down, if you want to have a true aggressive expansion, if you want to see price make a reversal, you need to get some aggressive price action. You need to get some sort of a manipulative boom, boom, boom. You're not just going to go here and then just like do this. Something prior to the expansion, something aggressive needs to happen. This sell to buy, that is an aggressive part. That's the manipulative move to mitigate that most refined demand to then reverse it back up higher. Okay. Now, my entry, as you can see in the screenshot, is higher up. I entered around here. The reason for that is because I wasn't behind my computer and I was in a restaurant not paying attention to the charts. So, a bit unfortunate. Otherwise, this actually makes a pretty big difference from an RR standpoint, because here your stop loss is 1% and here your stop loss is already like 1 point. I don't know. I think I'm at like 0.2137. So I entered right around here, I think. Yeah. You know, because I simply wasn't behind the computer. I would also love to share this setup with you guys in a live trading environment, but I was outside. My phone was 5%, and I was with my friends. So when I saw it, I was like, oh fuck! I just click, stop loss, and set and forget. But the reason why I'm so confident in entering with pretty heavy size right here is because now, where do I put my stop loss? Right here. Can price come back for this low and still continue with the model? Technically, yes, because this individual model itself could also go over in a 4-tap model that can be validated on the higher time frame as a 3-tap. But there's no reason for it to do so because there's no demand anymore left unmitigated. Because even if you zoom in here on a low time frame, like when you're talking about unmitigated demand POIs, this is like the most refined in the refined, and that's also what price tapped into right there. Like the perfect tap. So the invalidation here is super duper clear. Like it's such an ideal spot to put your stop loss because the chances of you getting stopped out and price still continuing with your idea is so slim. So it's like I am betting on a reversal here. I'm anticipating on a reversal. And if I'm wrong, well, then guess what? I'm wrong. That's why trading is a probability game and you apply proper risk management. You can always be wrong. And then after this, you even had a re-entry opportunity for the people that missed it. So if people talk about, oh, I wasn't awake, blah, 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 unless you're like in a very unfortunate time zone, most of the people here are EST. After this breaker structure, 6 hours later, you had a re-entry because price came back for the extreme demand with this super aggressive sell. But that's kind of what I always tell you guys, get like a very ugly looking distribution model with the manipulated sell and then the low time frame breaker structure in here to reverse it back up. You see the exact same thing happening also on the lower time frame after you did it right there, which I just showed you. That right here you have your distribution model, and then you get that aggressive sell to buy. They're just some extra market maker algorithmic manipulative moves to like try and scare you out of your position when you get these aggressive sells when your stop loss is there. But, in my opinion, there's no need to wait for this breaker structure right here because even from a structure standpoint, there isn't really anything between this high and this high that can stop price from going lower to continue with this downwards pull. Because it's mostly liquidity. Yes, it's a faster move down, but that's what's expected because you're wanting a reversal after a very long developing range that's like grinding down. So you want to see some sort of a sell to buy. But just from a structure standpoint, if you don't apply TCT and TCT, which you should have, because like I literally posted, add TCT within TCT to your entry journal or process. Even from a structure standpoint, if you apply this as your lower high for the lower low, you can dissect this lower high for the lower low in this structure pool, that broke back to bullish. And then you can apply the domino effect. And the reason why you can do that again is, again, you came into the most refined demand zone and there's now no more reason to go lower. So that's simply the entry process right here. And we're currently seeing the expansion. Stop loss right now can be trailed to this low, because price should really not come back to that anymore. So I'm only risking half of the initial risk I put on the trade, which is nice. But yeah, I would love to see this trade play out. From a Doge standpoint, just like a Doge chart itself, it's a really good chart. It's a really good chart. Looks ready to go higher in my opinion. The only thing is just Bitcoin. Like Bitcoin is very ugly, but the Doge chart is looking beautiful, and you created this demand zone in the process of well. So the entry is pretty safe, but stop loss right now is here, risking half of the initial amount that I put up. Just like that. Put it like that. And I'm targeting the technical target as my first take profit, and then I'm kind of seeing how far I can leave a runner if the markets truly want to expand up, continuing with the high time frame structure. And for some reason, when I turn it around, it always looks so much cleaner. Like when I turn this around, it just looks beautiful, bro. It was even TWT. I forgot to add that actually. It's even TWT right here. Look at that. So yeah, very simple. We you control the stop loss to that higher low. That's the most easy invalidation. We can pull back into this demand for a higher low for the higher high. Could also be then your high time frame model 1 goes over in a high time frame model 2 like this, or like in an extended model, where the third tap itself had its own accumulation model. So lots of accumulative price action in here. So we're gonna see. The only sketchy thing here was Bitcoin, but when the model is looking like this, you just gotta trade the charts individually. And I hope you guys understand the trade right now. I saw some people talking about being too afraid to enter, and you gotta journal. If that's the case, you gotta journal, because the only reason that you are too afraid to enter is because you are too afraid to lose money. And in that case, your money amount that you're risking is probably a bit too high for your current mental strength. So then lower your risk and build the right trading habits, because that was, in my opinion, a no-brainer entry. You can even see, look at this, guys. I asked for a buyback from the market. I wanted to see an aggressive buyback. And then you see this 45-minute candle tapping the demands, and we wanted to see getting tapped, closing bullish like that. It's a no-brainer. Okay, it's a no-brainer. Now, I want to check right now, since we're still on it. 1, 2, 3. Yeah, so on the 6 hour already. On the 6, on the 4, even on the 8. But already on the 6, like you can see that if you follow your structure, this is your 6 hour model 1 that can simply pull back right now, go over in a model 2. So if you want a re-entry opportunity, mitigating that demand with a low time frame structure break should be a long entry, where I will simply, I don't know, if the breaker structure looks really good, I'll be looking to add by trailing the stop loss to the new low, adding back. But I'm in a very comfortable position right now from an entry perspective. So I'll see how I handle it. Probably I'll have to see, but I'll update you guys. But you can definitely pull back in here before the continuation higher. And yeah, this is like, if this trade hits, I personally took it with a 2% risk, because it's everything that I wanted to see in the trade. Like literally it's everything I want to see while being TWT. It's like everything. It's my triple A plus model. So I took 2% risk, which is already back to a 1% risk, because I can simply throw my stop loss from this low to that low, which is really nice. And I'll maybe be looking to add another 1% risk if we get the right confirmations on the pullback here. Okay. And the RR is 10, so we're talking about a 20 RR setup to the technical target, which would be amazing, especially since the month May has been a bit more tough. And I hope it I don't care if it plays out or not, because I'll be happy to lose money on this, but I hope it does play out, not for the fact of me hitting take profits, but more so from the fact that, to show you guys that you can take 6-7 losses in a row, get your A plus model, and then go 2% risk on it, make 20% on an individual trade. Whereas on the other losing trades, we did like a 0.5 risk because, we were backing off because we were not completely sure. And then you can have like 3, 4, 5% drawdown, one good trade, boom, you're up 15%. But again, you can only get those results if you execute consistently with correct risk management. So, hope you guys all have an amazing rest of your Sunday. I'll be active in the server, taking care of some stuff, and I will throw out some updates regarding every chart soon. Peace out, guys.